So what we learned over time is that you know a lot of the big winners have common denominators, right? They're common characteristics, and when you start to look at them and simplify it, you can put together a criteria that is it's not a guaranteed way of being successful, but it certainly dramatically increases your odds. And it's little things like share structure. A lot of people don't really understand what that means, but everything that's determined or that has a pricing mechanism is determined by supply and demand. So if you're finding a company that's got a smaller amount of shares outstanding, if the demand increases, it's going to have a bigger impact on the share price. So that was one thing. You also want to see insiders with the right kind of vested interest. So, a company that has a higher insider ownership is likely, historically, to do better than something that has a very low insider ownership. So, those are just two of the things we look for. But after all the work we had done in the microcap space, you understand that to really find a extremely successful winner, you have to find companies that have growth, right? And not just small growth, but large growth, like 25, 50, 100% per year in top line growth on a per share basis. I can get into what the difference there, but really growth is a driver of real success in the microcap space. So that's the first thing we look for when we look for new microcaps. We're really looking for something that's growing very quickly. Now, one of the advantages you have in the microcap space when you're looking for growth is that a lot of other investors have a hard time pricing or valuing growth, right? Everybody thinks that a stock that's trading at 20 times earnings, it sounds expensive compared to one that's trading at 10 times earnings. But if that one at 20 times earnings is growing at 100% a year and the other one's growing at 10%, that 20 times earnings stock is significantly cheaper than the other one. But a lot of people don't really understand that dynamic. And once you do, it gives you a little bit more advantage when you're sort of competing with other investors. Yeah, so there's a process I do every year. As a matter of fact, I do it twice a year now, where I literally, in Canada, I go through every single financial filing on CDAR, which CDAR is a four-letter word to me lately, but so what I do is we pick over all the different companies that are listed to try to find the companies that are, meet the criteria that I sort of talked about, rapid growth and profitability and share structure and all those things. And through that process, I found this obscure little company called Expel. The stock was trading around 15, 17 cents at the time. It was profitable. It was growing. Nobody had ever heard of it. It met it sort of checked all the boxes we were looking for. And I think at the time it was trading around 8 times earnings. It had I think a $4 or $5 million market cap, like it was next to nothing.
Wow.
And it was growing its revenues at about 100% a year. And it had been doing that for like 8 quarters. So what was interesting is when I first found it, I told a few people in the industry, and they kind of looked at it and they came up with all sorts of excuses as to why they didn't like it. And I just kept looking at the numbers and said, okay, well, there's got to be something here. And they had an obscure product. I had never seen it before, but it was, for those that don't know it, they manufacture paint protection film for your car, right? So it prevents scratches and dings and things like that. So, I think we were just coming out of the recession. It was 2013, 2014, and people were saying, yeah, but that's a gimmick. Only expensive cars are going to use it, and they're not selling more cars and whatever. I was so many different excuses. But here I was, found the company, started buying as much as I could, and the stock started to perk up a little bit. And just around that time, I joined the Microcap Club, and that was my write-up. So what you have to do through Microcap Club is, to be accepted, you have to write a research report, and then that research report gets voted on by the existing members, and if they like the report, they let you in, right? So that was my report, and I remember putting it out there, and stock perked up a little bit, and I think it was around 40 cents when I wrote it up. And what I didn't realize was I was part of the discovery process, right? I had sort of brought it to a new audience. this audience had never seen the company before, had never heard about it. They started looking at it, doing a bit of due diligence, seeing the same things I did, and before you knew it, all of a sudden the stock's a little bit higher. I was just fortunate. I guess I was the first one to find it, but there's been many like that, thankfully. But yeah, I mean, it was a rocket ship when it actually really started to take off. For those that don't know, it went from about 17 cents where I first started buying it to over $100 US. And it's since still trading at about $45-50. But along the way, I learned so much. It was one of the best performing stocks in Canada ever, and yet not a single analyst ever covered it in Canada, right? It had moved from, sub 20 cents to $8 Canadian. Well, it was always trading in US dollars, by the way, but went to $8, and then they moved to NASDAQ, and the first analyst coverage actually came out of NASDAQ or US when it was listed. So here's this company that did fantastically well, and yet almost nobody in Canada knew about it, right? And certainly the industry didn't care about it. And here's another thing I learned: if a microcap doesn't need capital, the investment bankers and analysts have very little interest in these companies, right? So that was another dynamic that I understood there. But suffice to say, XPEL did what it did. It gave me notoriety. I thankfully made a lot of money from it, but more importantly, I think it put me on the map as far as maybe this guy knows something or a few things. Yeah.